Welcome back to this Money Control live stream. We're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, hi Yatin. Yatin, we started the day on a strong note, despite the kind of cues that we were getting from the US market. Plenty of tantrums in terms of tariff.
Yes.
You know, there was quite a bit of a flip-flop when it comes to tariffs on Canada. First, of course, Trump threatened 50% or doubling of tariff on steel and aluminium on exports on Canada, but then he returned back. In fact, he did a U-turn of sorts and retracted that particular move. But we started on a good note, but we did wobble in the middle. The Nifty, in fact, dropped to somewhere around 22,350 or thereabouts, but we staged a good recovery. We managed to defend that support level of 22,450. In fact, we ended close to 22,500 mark. So we will take heart from that fact. But the broader end of the markets, underperformed today. Midcap index, even midcap and small cap indices started the day on a strong note, but we gave up all of that, all of those opening gains, and in fact the broader markets ended the day in the red. The midcap index was underperforming, down 0.5% or thereabouts. Advanced decline ratio was pretty strong at the start, but again it flipped, and towards the end of the session the advanced decline ratio stood at 1:2. Banks, autos, FMCG, Pharma, these are some of the pockets that stood firm today and managed to stem the losses, in fact managed to lift the Nifty, so to say. But of course, the topic of the day, IT stocks, very sharp sell-off coming in, 3% cut. The blue chip names like TCS, Infosys, Wipro, all of them were down anywhere between 2 to 5% apiece. And of course, the index also slipped into the bear market territory today. Yatin, a 20% correction from all-time highs that was hit back in December. So yes, sell-off in IT stocks dragged the market today. But let's take a look at some of the gainers and losers then. IndusInd Bank, after the drubbing and after opening the day gap down, staged a very good recovery. In fact, it was the top Nifty gainer, some bit of buying emerging at lower levels. Tata Motors, there was an analyst meet, strong commentary on JLR. Brokerage reports were also positive, so the stock was among the top gainers. Kotak Bank, HDFC Bank provided some bit of leg up to the Nifty Bank index as well. Bajaj Finance was the other one that was gaining. On the flip side, tech names dominating the list: Infosys, Wipro, Tech Mahindra, TCS, HCL Tech, all of them down and out. Nestle and some of the other FMCG names were also under pressure. In fact, taking a look at some of the other laggards, Yatin, you had Asian Paints, Tata Consumer. These were not doing well. Axis Bank also, although other banks were doing well, Axis Bank wasn't doing all that well. Bharti Airtel, after opening the day on a positive note, on the back of the pact with Elon Musk's SpaceX to bring Starlink to India. Even Reliance has, by the way, Jio Platforms has signed a pact. But Bharti gave up its gains, although Reliance ended the day in the positive. But Yatin, broader end of the markets, what were the movers and shakers there?
The broader markets weren't that great today. In fact, last 2 days there have been some dullness in the markets, especially the mid-cap index down 0.5%, small cap index down on a similar basis. Advanced decline ratio clearly showing you, which was 1:2, that mid-caps are under some bit of pressure. However, if you look at Nifty 500, the top gainers continue to be sugar stocks, especially Balrampur Chini. That stock surged nearly 8% in trade. Stocks like KEC International, BSE, NLC India, after the recent correction, have shown some bit of bounce back. And as you mentioning, IndusInd Bank, that is one stock which hit a low of nearly 606 today, and the high of the day was almost 700. So nearly 15% intraday move that we saw for the stock of IndusInd Bank. What was not doing well is Indegene. That stock continues to languish, 9.5% down for that stock. Bharti Exa, LTTS, Anand Rathi, Infosys Solutions, all of these stocks are clearly witnessing 5 to 6% kind of a cut. In fact, Nandita, not only the large cap IT stocks, but the mid cap IT stocks have seen a big correction for the week. In fact, as I was mentioning, FSL, Orbit, LTTS, stocks like Persistent Systems, Infosys, have been clearly coming off highs. In fact, few of these stocks are now at 52-week lows.
That's true, Yatin. IT stocks have been in focus, amid all the tariff uncertainty and, talks of a global or US recession looming. Yes. After the Q3 numbers came out, with the commentary also coming out from management, there were hopes that the worst on the revenue front may be over. But now with the talks of a slowdown in the US, there may be a question mark on that front. We'll talk about the Morgan Stanley report as well, which has mentioned that there could be some downside when it comes to revenues and valuations both. But looking at the IT pack, the index hit a fresh 8-month low. It had hit a high back in December 2024, but it has corrected over 20% from that peak. In fact, entered bear market territory today. As I was mentioning, all the stocks are down 2 to 5% on the blue chip front. Even the mid-cap names, as you mentioned, were reeling under pressure. Pick up in discretionary spending. We were all banking on that for a recovery, when it comes to IT names. But that may not materialize in FY26 if you go by what analysts have to say. Trade wars, could push the US economy, the world's biggest economy, into a possible recession, with Trump, in fact, in an interview over the weekend to Fox News, had not ruled out the possibility of a recession. I mean, otherwise, vehemently, you kind of tend to rule out such things, but he did not rule it out. And he's also maintained that, you have to work on the economy. Stock markets can go up or can go down. So, yes, there are talks of a recession, and North America is the biggest market for Indian IT, and weakness there means, of course, their revenues will face some pressure. Now, let's talk about the Morgan Stanley report on IT. In fact, they've said that the shifting macroeconomic environment and technology evolution, these are some of the factors that could increase risks for IT names going forward. Revenue growth, if the US economy slows down, that means it could push back discretionary spending further. There were, early signs of some bit of recovery, but that may also fade. And so that could be a risk. Valuation multiples as well, facing downside risks from here. Currency, was supportive of margins, but look at the dollar index. From 110, it has come down to 103. Right. So it has also seen a fair bit of correction. So maybe the currency tailwind may also fade out. Now, aside of that, let's talk about the Morgan Stanley report as well. In fact, not the Morgan Stanley, the Motilal Oswal report. They have said that sentiment has turned cautious from January to March, and enterprises are hesitant and are in a wait and watch mode when it comes to spending. Capex is a focus, but services spending isn't a priority as of now, as there are talks of a slowdown and the entire uncertainty around the tariff scenario as well. Motilal Oswal has downgraded Infosys to neutral. It has downgraded Wipro to sell. It has downgraded L&T Tech as well to neutral. And of course, it has also pointed out that discretionary spending, uptick in that or recovery in that in FY26 may be uncertain, which of course makes the earnings picture for IT names hazy. So few factors not boding well for IT. Rate cut chances have dwindled. You have tariff risks looming, and that could weigh in on stability. Sentiment has turned cautious when it comes to discretionary spending. It was already cautious, but now enterprises are again adopting wait and watch approach. Generative AI adoption is progressing, but it hasn't yet boosted IT services revenue. There's some time for that to happen, and clients, of course, are still prioritizing capex over services spending. So yes, but they've also maintained that TCS may be best placed among the other names because it has the growth, of course, has been poor over the last 2-3 quarters, but it has underperformed other IT names over the last 6 months. So there could be some bit of valuation comfort there. But if you look at Motilal Oswal's preferences, LTI Mindtree and TCS are some of their risk reward balance. According to Motilal Oswal, Nifty IT's PE is still elevated if you compare it with the Nifty PE despite the recent correction, and current premium of 37% is still higher than the last 5-year average. So yes, everyone was banking on recovery in consumer discretionary spending, but looks like that is going to get delayed, and if that happens, outlook for IT stocks becomes hazy once again.
And I think, as a lot of market experts are talking about the uncertainty with respect to US growth, what the tariff tantrum does, we don't know. In this environment, we have the IT stocks which are not doing well, and also we don't know that how much generative AI really impacts the IT stocks. It might complement the current business, but you never know how much business does this efficiency factor take away. Moving from IT stocks to cement as a sector, which was quite dull in trade today, we have the Tamil Nadu government which notified increase in the entire mineral tax basket for the state of Tamil Nadu. Specifically with respect to cement, limestone mineral tax has been increased by nearly 160 rupees per ton, or that is the net impact of the mineral tax going higher. Remember a few days back, we had the Karnataka government winning that important Supreme Court case with respect to levy of mineral taxes. And post that, a lot of state governments are, has been trying to increase their revenues by imposing higher amount of mineral taxes. Now, when it comes to 160 rupees per ton levy on limestone, this would mean an incremental cost of nearly 16 rupees per 50 kg bag for cement companies. Now, cement companies are left with two choices: either pass on this cost increase of 16 rupees to the consumer by way of price hikes, which hasn't been happening for the past few months, or absorb it for a temporary period, which might impact their margins. Talking about the state of Tamil Nadu, we have three companies which might get impacted because of their exposure to the Tamil Nadu geography, especially the kind of limestone reserves that they have. Number one is Ramco Cement. They have one of the highest clinker capacities in the states, more than 50%. Then comes Dalmia Bharat, and then comes Ultratech Cement, because recently they acquired India Cement, which has again a very large presence in the state of Tamil Nadu, along with their natural resources, which is the access to limestone. So these were the three companies which briefly saw correction in intraday trade today. In fact, we have the shares of Ramco Cements, which fell as much as 7% intraday, and Dalmia Bharat also was almost 5% lower in trade. So these two stocks specifically saw the highest amount of impact for the trade today after the notification which came to the public domain with respect to the state of Tamil Nadu on limestone.
All right, some setback for some of these cement names then, but cement demand was of course expected to see an uptick on the back of higher government spending in the second half. Of course, with this tax coming in, there could be some bit of a setback for some cement names. But the other stock that was hogging the limelight today was Tata Motors. The stock has been languishing, Yatin. It had hit a 52-week low recently. Today made a smart recovery of 3% or thereabouts among the top Nifty gainers. It did snap out of a 2-day losing streak. There was a analyst meet yesterday, and the management has reassured, about meeting the target when it comes to JLR, turning net debt free as well. And those commentary, came as an upliftment, when it comes to the sentiment around the stock. At the analyst meet, the management has said that JLR will meet its fourth quarter EBIT margin guidance of 10%. That's a double digit, and it will turn net debt free by the end of FY25. In fact, when it comes to demand, they've pointed out that US continues to do well. In China as well, they have been outperforming. In EU as well, in the European Union region as well, the demand scenario has been less challenging than what they were really anticipating. Of course, they will be keeping an eye on the entire tariff scenario as to how it really pans out, but they've also mentioned that demand in UK has also seen some bit of an improvement. And in fact, they've said that premiumization of JLR and commercial vehicles business in India is also progressing well, but passenger vehicle segment is something that still needs an improvement. Domestic CV margin improvement has also been on targeted lines, and the focus will be to arrest market share loss in small CV segment as well. So yes, these commentary came as a booster shot for the stock as well. In fact, brokerages have also come out with positive note on Tata Motors. Starting with Nomura, they have a buy call. The target price is at 861 or thereabouts. Management is fairly, of course, they've taken note of the management comments. They've said that warranty costs are also expected to drop from FY25, and the stock is now trading at 4.7 times FY27 enterprise value to EBITDA, which is why they've kept a target price of 861 or thereabouts. Macquarie, on the other hand, again outperformed, rating target price in excess of 826 rupees to be precise. They have taken note of the fact that JLR is on track to turn net cash balance sheet by FY25, and of course, domestic commercial vehicle segment margin improvement has also been on expected lines. But CLSA had recently added Tata Motors to its high conviction outperform list. They've maintained that call. They've kept target price of 930 rupees, closer to 1000 rupees, and of course they are also pretty much positive post the commentary that came in from the management yesterday. JLR, of course, trading below normative multiples. That's what CLSA has pointed out. So all in all, JLR, per se, was seeing some bit of demand slowdown for its premium brands like Range Rover and a couple of other names, and there were concerns that there would be higher discounting on Range Rover going forward as well. So these concerns were there, but now with the management commentary on positive management commentary coming in on JLR in terms of achieving the FY25 aim of 10%, I think that has come as a balm for investors of Tata Motors.
Absolutely, and as you were mentioning, I think the management has in the past also reiterated their JLR margin guidance and the FCF guidance. Obviously, in the last 1 month, there was a lot of back and forth. Is BYD giving more competition in China? Is EU slowing down? Are the US bookings down? I think management has allayed a lot of these concerns, post with the stock witnessing a relief rally, 3% higher for that stock.
All right, then those were all the stocks that were on our radar. But of course, I think just in a few minutes from now, we'll get the India retail inflation data, which is expected to come in sub 4%, and we have the US retail inflation data coming in later in the evening. Of course, that will also give us some picture as to what the Fed may do in its next meeting. But you never know what Trump says about tariff and how global markets react, because yesterday as well, of course, with what happened with Canada, stocks were in a tailspin. Let's see what happens on Wall Street tonight and how we react to it tomorrow morning. But with that completely timed out on this edition of Closing Bell, thanks a lot for tuning in. Have a great evening and come back and join in tomorrow morning, 9 a.m. sharp on Opening Bell. I'll see you there. Thank you. Thanks a lot for watching.